It's my first time. Couple things went wrong, had some issues trying to get into my own live stream, but here we are. Welcome to my first YouTube live stream. I am calling this gold, silver, Bitcoin, and Botox. You'll see in a moment why. I'm really just looking at what are some of the trends going on. What did we see in the market today? The market was nuts. And when the market is bleeding red, my favorite thing to do is to see what is working, to see where the money is flowing. So why am I doing a live stream? I haven't been doing a lot of YouTube in the past few months partly because it's time consuming to edit. Haven't yet graduated to that level of having an editor. So it's a new month. It's a new skill. I'm going to be doing some radio in the very near future. I'll be doing a separate video about that. Radio is all about the timing. Like you've got to actually be there on time if the radio is live, and if it's recorded, either way, you've got to time everything down to the second. So I thought this was a great challenge that I wanted to start giving myself and not being able to rely on editing. Also, like I said, I woke up this morning, the market was bleeding red. What the heck is going on? And I just wanted to share, my learnings and what I do, what I see, what I look at when I see the market having a bad day, we might say. So the bond market, there was a big sell-off in the bond market, especially Japan and China. They were selling off bonds, and that was causing yields to rise. That was causing the stock market to get extremely nervous. And I think we basically saw all of the major indices sinking by more than a percentage point today. And we've seen, the AI stocks and some of the tech stocks that we saw really rally after the terrifying tariffs back in the spring. We've seen some of those do better, do great lately, but the last couple of weeks have definitely been very rough. So what's going on? Yes, concerns about the economy, concerns about US policy. I think the tariffs are also adding into that we maybe haven't seen them go as low as we hoped or thought that they might. And the US dollar, by the way, is not nearly as strong. I don't hear this talked about very much, but definitely it relates to the gold and silver that I'm going to talk about today. Because the US dollar in relationship to the other currencies has lost, as of a month or two ago, it had lost 11%, I think, just year to date. It might have bounced back up a little bit, but I think it was it Morgan Stanley? It was one of the major Wall Street companies was predicting that we could see it go down like another 10% before the end of 2026. Now, some people are saying this is intentional. This is part of the great, 3D, 5D chess strategy to make it easier to pay back some of our debt. Obviously, that's another concern, is just how much US debt, how much debt the US is carrying. And even after Doge, which didn't really seem to accomplish its goals, after Congress people voting for a new budget that sinks us further into debt, we are going to have some challenges trying to pay back some of that debt. So the US dollar has been sinking, and this is one of the reasons why we've seen gold do so well this year, which you may be aware of, or maybe not. This is something that, your local financial advisor, your Edward Jones guy, your person at the bank who's selling you mutual funds, I am sometimes amazed at how little they pay attention to what are the trends in the economy. I'm certainly not an economist, but I have had some great results in the stock market. And one of the ways that I have often, not always, but often been able to beat the S&P 500 is just simply paying attention to these trends and keeping myself diversified, but not in, mutual funds that sometimes I refer to mutual funds, especially the target date funds, as financial sausage, that everything is wrapped up into it and you can't pull something out. And so I like keeping my assets, at least some of my assets, separated so that I can, be responsive to whatever the market is happening. If they're low and I think they're going to come up, I can add some money in. If they're high, I can decide to trim a little bit of those profits. But also, when I see that market bleeding red, it is a time to rely on the proven strategies, time to be very aware of the investor psychology, because there's been studies done by Dalbar, Dalbar, quantitative analysis. I'm not sure the exact title of the study, but in these studies they have shown that the average investor, their returns are much less than, let's just say, if they had bought the S&P 500. And even if they are buying, an index fund with the S&P 500, people get nervous. We react emotionally to what is going on. We saw people do that back in, was it March or April? I think it was April, when we had some really bad days with the tariff announcements, and it's easy to panic and just push sell. You're like, oh my gosh, it's already down, 10%, 15%, 20%, whatever it is. And you think, how bad can it get? I'm going to stop my losses by just pushing sell now. And knowing what I know, understanding what I know about investor psychology and the patterns, I know that I'm definitely not selling on a day like today. If I am going to sell, I'm going to sell something maybe that is doing well on a day like today, even when the overall market is down. So important things to keep, to keep in mind. And as I said, I want to talk about what's working right now in the market. I have this philosophy. It came from a 2020, I believe it was, a podcast interview that I heard. It may have been with Russell Brunson. I think it was. And he said, money is always flowing somewhere. In the times when we're scared and there's a lot of challenges, or it feels like, we're looking at the stock market and it looks like it's bleeding red, we've got to dig a little deeper and say, well, if this is where the sell-off is, the stock market, the bond market, where is money going to? Because money is always flowing somewhere. And love that idea. It has really changed how I think about investing. And one of my favorite tools that I use, I'll have to post a picture of it, and you may be aware of it, FinViz and other apps. They do the S&P 500 heat map, and it is it's a current, like a today or an hourly, maybe it changes every minute, I don't know, but it's a current map showing all 500, it's color coded, and it shows all 500 of the companies in the S&P 500. And during that particular trading day, how are they doing? Are they red? Are they green? And it's color coded, so you can see the really green ones, you can see the really red ones. It's more of a blackish brown. If it's neutral, it's sort of this brownish color. And it's a really great tool. And I started when I started really, diving deeply into investing for myself in 2020, when there was a red day. I loved going into the heat map and seeing, well, what is working, what is winning, what is resilient when everything is falling apart. What or seems to be falling apart, what is it that is resilient in that moment? And today I looked at my IRA, I looked at my brokerage account, and pretty much, with maybe an exception or two, pretty much there were four things that were green. There was Bitcoin was green by a bit. Bitcoin, I didn't mean that pun. I have gold investments, I have silver investments. Those were incredibly green. And then also AbbVie, the maker of Botox, hence the name gold, silver, Bitcoin, and Botox. AbbVie, which is a pharmaceutical healthcare company, it was also green. And so this is really what we are seeing. What I can, I'm going super big picture here. I'm not, like a super detailed analyst, and I don't think you need to be. I think we just need to be aware of what are the big trends. And in the last several weeks, we have seen a lot of instability, a lot of nervousness in the stock market. We've seen some pullbacks, especially with AI stocks, especially with some tech stocks. And we have seen gold and silver investments, especially gold, doing incredibly well. Bitcoin's had, its hiccups as well. And I think for the year, Bitcoin is up about 15%. Gold is up over 30%. My gold investments, how I like to invest in gold, they are up more than 70 today, more than 80% year to date. And this day closed with, I had a nice bump on a stock that did do well. And when the market closed today, my IRA was actually green, which sort of surprised me, green for the day. So this is because when people are nervous, when we're, there's a lot of rumors right now, are we going into a recession? How is the job market doing? Maybe not so great right now. How is our economy doing? How is there faith being lost in the US bond market, in the US stock market? I think long term we're going to be very, very resilient, but right now we have a lot of question marks going on. And when there's doubt, when there's question marks, people are absolutely buying their gold. They are not just people, but we also see banks, we see institutions, we especially are seeing central banks from around the world. They have been buying absolute record numbers of gold. And I say gold, I'm not mentioning silver right now, because really that is the asset, banks and central banks, they hold gold as an asset. They don't hold silver as an asset. Silver does, it's also an industrial metal. Gold a little bit, not as much, but silver, it benefits definitely from the movements of gold. But we have seen gold and silver kind of drift further and further apart in recent years. And gold is something where, again, you're probably not going to have your local Edward Jones guy, talk to you about it, because they are only going to be able to talk about the assets that they sell. Oh, that's a whole nother topic, is, bias, and how are the people that are making the recommendations to you, or, advising you, helping manage your money, how do they make their money? And definitely bias, I think, is one of the biggest risks that we have. And gold has this long-term, sometimes people call Bitcoin digital gold, but it's interesting this year that we are seeing gold definitely outperform Bitcoin. We're also seeing Ethereum outperform Bitcoin as well. I think Bitcoin is, who knows, it might be kind of slowing down in its gains, although, it's having a very, very respectable year so far. So I do recommend, and if you in addition to the S&P 500 heat map, some things you can do to see where money is going. I recommend looking at your investments. How are they performing? How have they been performing? Look back for a month, look back for a quarter, look back for a year. When people delegate those decisions, or they just make those long-term decisions and just don't look back, sometimes you can get into a lot of trouble that way. It was interesting recently finding some notes I had written in 2020 of some investments I thought were going to do really well long-term. And I was right with some of them. I was absolutely wrong with some of them. And when we're paying attention, sometimes we say, oh, that thing I thought was going to do well, it's just not. It's just time to dump it. My clients, I'm always, encouraging them, if they're not choosing their own investments, sometimes they have inherited the investments, sometimes they've sat down with an advisor 5 or 10 or 18 years before, and they chose some investments, maybe had them recommended to them, and sometimes they're just not great choices long term. Maybe there were reasons at the time. So let me talk about AbbVie also for a bit. That, why is AbbVie doing well on a day like this? And you can look at the S&P, the heat map, and see there's other companies like AbbVie. And when I say like AbbVie, maybe they're in, healthcare or pharmaceutical, although pharma's had a bit of a rough year with, some very serious questions about the mRNA shots and their safety, but that's not AbbVie's lane. And really the lane that AbbVie sits in, and when we even talk about something like Botox, yes, that's healthcare, but it's also, related to cosmetics. It's also related to consumer habits and what it is that we choose to do with our money, with extra money that we may have. And AbbVie sits very squarely in the camp of dividend paying stocks. And it has been a really great dividend stock, not only gaining in the stock value price, but the dividends have continued to rise, I think, on a fairly steady and regular basis. And so AbbVie is in that, even though it has, you could call it a growth stock in terms of how it has grown, but as a dividend paying stock, it's not in the same category as like your AI stock, certainly not in the same category of anything that is speculative, like, oh, we're hoping this will make money someday, we think this will make money someday. No, we see AbbVie, they've got a very wide base of products or medications that they sell. They are continuing to do research and development as a growth stock would, but then they also pay what tends to be a rising dividend. And that dividend paying stocks, they are simply less volatile. When the market is going nuts, it is those more speculative plays that get hit the hardest when we see the volatility. And it is the dividend paying stocks, the companies that have less debt, more cash, the ones that are returning. We could see dividends as something of it's like your loyalty reward for remaining with the stock. So I wanted to share all of that and a bit more about gold. I am a fan of gold. I recently did, I think it's a YouTube short, about how I don't think that physical gold is necessarily the best way to invest in gold. I will say there's pros and cons to any particular method. And recently I did almost a 3-hour training. I dug really deep into gold, why you should consider investing it if you're not already invested in it, and the different ways to invest in it. I went through 7 different strategies, talked about the pros and the cons of each. There's advantages to physical gold. There could be advantages to to owning stocks, to being in a trust, to having an ETF. And some of these, they're taxed differently from each other. You know, a lot of people really do want that physical gold, and then you've got to talk about what are the costs. Are you going to pay for the transportation, for the storage, for the insurance? If it's in your IRA, you can't physically hold that gold. And a lot of people, they're looking to invest their IRA money into gold. Definitely watch that YouTube short if this is you. There have been, there's really been some lawsuits and some things going on that, you know, the cost can easily add up to taking 10 or 20%. And then you've got to look at the exit strategy. Okay, so now you want to actually use that investment to buy something, to do something. Now you've got to convert the gold back into dollars. So I think there's a lot of fear mongering, especially that happens on YouTube, where you know, the powers that be, that the powers that are selling you the gold IRAs would love you to think that the world is completely ending, and that, but even if the world, you know, even if things are going absolutely nuts and it is, you know, bad times, I really question whether you're going to take that gold coin and go buy groceries with it or go pay your mortgage with it. You're still going to have to convert it back into a dollar. I have a friend who was traveling, this was many years ago, he was traveling in a South American country doing some backpacking. There was a lot of instability in the country at that time. So they took some gold, maybe some silver, some precious metals with them, thinking that if there was a currency collapse, this would really come in handy. And there was like a currency collapse, and his coins just didn't really help him at all. He said, we found out, you know, again, he's backpacking. They found out that really it was things like batteries, Gatorade, water, that's what people wanted. They were bartering, but the coins did not come in handy. So even if you're looking at barterability, there's a lot of other options besides or in addition to coins. Yes, I'm gonna wrap this up, but first I want to give you, I will leave in the description, check out